a cyber breach with global implications to bold job cuts shaking up the world's biggest consumer goods giant, and Dubai's tech juggernaut expanding its global reach. There's plenty to unpack, and later in our deep dive, gold and silver are glittering at record highs. But what's really driving this precious metal rally? We'll explain why investors are flocking to safety and whether the shine could fade. Welcome to Finance Pulse, and here are the top headlines of the day. We begin in the United States, where cybersecurity circles are on high alert after what experts are calling a potentially catastrophic breach. Seattle-based F5 Inc. Corporation, a major cybersecurity provider whose products are used by Fortune 500 companies and US government agencies, has confirmed that its internal systems were hacked by state-backed actors, with investigators pointing the finger at China. According to regulatory filings, the hackers managed to gain long-term, persistent access to F5's network, stealing sensitive source code from its big IP suite of security tools as well as internal vulnerability data that could be used to target its clients. Next, over in Europe, a shake-up at the world's largest food and beverage company. Nestlé's new CEO Philipp Navratil has announced a sweeping restructuring plan that includes cutting 16,000 jobs, 12,000 white-collar roles and 4,000 additional positions over the next 2 years. The move is aimed at improving efficiency and driving a long-awaited turnaround at the 158-year-old consumer goods giant. Investors responded swiftly. Nestle shares jumped over 7% after the announcement, reflecting renewed confidence in Navratil's vision. And in the world of technology and innovation, Dubai's flagship event brand Gitex is going global once again. After dominating the Middle East and Africa tech scene, Gitex has announced its expansion into Latin America with the first ever Gitex Latam set to take place in Sao Paulo, Brazil in March 2027. Organized by Dubai World Trade Center in partnership with the Sao Paulo Development Agency, the event is being billed as a catalyst for the region's digital transformation, with Latin America's digital market projected to reach a staggering $950 billion by 2026. And now, we turn our focus to something shifting bright on Wall Street: the unstoppable rise of precious metals. Gold and silver are trading near record highs, and analysts say the rally may be far from over. This month, gold prices crossed $4,000 per troy ounce for the first time ever, while silver broke the $50 mark, levels not seen in decades. On Wednesday, gold hit a fresh peak above $4,220 and silver surged past 53. So what's behind this meteoric rise? In simple terms, fear and uncertainty. As equity and bond markets have wobbled under the weight of global economic tensions, investors are turning to precious metals as a traditional safe haven. Gold, as one analyst put it, acts like a teddy bear in volatile times, offering psychological comfort and tangible security. But there's more to it than sentiment. Analysts from JP Morgan estimate that if just 0.5% of US foreign-held assets shifted into gold, the price could soar to $6,000 per ounce. Meanwhile, silver, platinum and palladium, often considered secondary metals, have also surged between 75% and 85% this year, lifted by the same safe haven momentum. This isn't the first time fear has fueled such a rally. After the 2008 financial crash, gold and silver rose by hundreds of percentage points. And during the pandemic, they again became refugee assets as markets stumbled. Today, with ongoing tariff tensions under the Trump administration, a weakening dollar, and expectations of future rate cuts, many investors see precious metals as a hedge against both inflation and currency depreciation, what analysts call the debasement trade. However, some caution that the rally might be due for a breather. Bank of America strategists note that after 8 consecutive weeks of gains, gold historically tends to pull back in the short term, though they still forecast higher averages next year, potentially reaching $5,000 for gold and $65 for silver by 2026. In a sense, precious metals are on the rise not just because of what's happening in markets, but because of what's not happening, stability. As global uncertainty persists, gold continues to glitter, both as a symbol of wealth and a refugee from risk. That's all in Finance Pulse for today. Follow the Finance 360 for more updates.